Imagine a future where refueling your Tesla is completely free. Financial wizard Gary Black predicts the reality of Tesla's battery costs falling to zero. The electric dream is closer than you think. We don't do that. This tends to happen a lot. I think all I want to say is that FSD will happen. I think robotaxi will happen. And Herbert, you are right in pointing out when this happened. I'm not nearly as bullish in the near term. I think the best way for them to monetize. I personally think we'll see a roughly $100 billion deal with the Department of Defense to license the technology in Dojo for use. I think that's less responsibility with the upside and validation of the technology. Learning about things alone, all you said, Herbert, that's what makes it worth using. It can also be paired with the Starship Starshield satellite deal. It's like they're actually having those conversations. Procurement teams already know each other, like there. I believe this is the path of least resistance to modernization in the near term. Now bring it back to what is tangible today for a car company and an energy company. Gary, I'll bring this up with Rivian as a base case. Rivian beat its revenue expectations last quarter due to the shift to batteries. They eliminated expensive nickel batteries. Then we can all track it, and then at least once a year it's drawn into our models. But since they don't distribute it, they just give you the revenue, and they give you the profit and everything else in between. It's in the cost. Gary Black made a mind-boggling prediction, predicting that Tesla's battery could literally drop to zero in just 5 years. This is an exciting era for electric vehicles, and Tesla's journey remains an epic tale of innovation, self-sufficiency, and great ambition. Its ability to maintain these traits determines how long it will remain at the top of the industry today. A big Tesla fan and investor reveals how Tesla could completely take over the entire electric car industry simply by reducing the cost of its batteries. But you may be wondering, why would Tesla venture into the world of battery factories? Well, it's all about making EVs more accessible to the masses, and Tesla's grand plan revolves around making affordable EVs that can fend off competitors and win new customers. To do this, battery costs must decrease. But how will this happen? This is the secret Gary Black reveals to us. Elon Musk has been very transparent. It's very focused on volume versus margin growth this year. Alex, so I mean interesting numbers. We see it as more affordable to the consumer. We're definitely winners in that aspect, but it's not necessarily seen as a winning sign for Tesla, perhaps indicating that they have some demand issues. They have to keep lowering their prices. It's hard to say with a company like Tesla. This was largely part of the plan. It seems that from the beginning and Elon Musk's involvement, the idea was to start with an expensive car to make a slightly less expensive car, to make an affordable car to make a very affordable car. And it looks like they're really trying to pull this off. But I've also seen another explanation that I think makes an interesting idea and maybe also deserves some merit, which is that they're trying to kind of implement this sort of razor and blade process, where the car itself isn't necessarily the bread and butter, but it's the software updates, the whole service that drives the battery and its applications in another place. This idea is that a Tesla will get you in the door, but then be monetized. Very similar to the way the iPhone seems to work now. Yes, the iPhone still makes Apple a lot of money, but they're increasingly reliant on you accessing the App Store and services after the fact as much as they are on the device itself. If Tesla wants to create electric cars that everyone can afford, the focus must shift to battery cost. Industry experts have emphasized the importance of implementing cost controls throughout the supply chain, especially when it comes to batteries. But the question remains, how will Tesla achieve this? Can the automaker really reduce the cost of its battery to zero? Keep watching as we find out the answers to these important questions. Hi guys, welcome back to Tesla Tomorrow. Gary Black once predicted that by 2030, Tesla would earn $30 per share at a growth rate of about 15%, with a PE ratio of 30, making Tesla's stock price $900. His idea is that Tesla could record a growth rate of 30% per year, versus the expected 50%. Gary Black also expects EV adoption in the US to rise to 60% by 2030, from 6% as car prices fell, with Tesla producing up to 10 million of these vehicles. However, to do this, Tesla needs to reduce the cost of its batteries in 2022, and Musk told investors that the 4,680 batteries will play a crucial role in Tesla's plan for 2023. He also added that this new design could reduce their cost by more than 50%. According to Musk, these 4,680 batteries are ideal for long-range vehicles, making them suitable for vehicles like the Cybertruck. So why should Tesla reduce the cost of its batteries, and how will the automaker do this? Let's find out. But before we do that, if you like this kind of content, hit the like button. Subscribe and turn on notifications to stay up to date with everything happening with Tesla. In 2020, Elon Musk revealed Tesla's strategy to significantly reduce battery costs. According to him, Tesla planned to recycle the cells at its Nevada Gigafactory while reducing cobalt, one of the most expensive battery materials, to almost zero. He also revealed that Tesla plans to manufacture its own battery cells in several automated factories around the world. While the automaker is showing significant progress in the latter area, it has not yet actively recycled batteries on a large scale. However, there are some additional steps that Gary Black recommends, which could reduce the price of Tesla batteries to zero. First, Tesla can vertically integrate its battery supply chain by producing key components in-house. This includes the production of cathodes, anodes, and other important battery components, allowing better control of cost and quality. To do this, Tesla will need to control its supply of raw materials. Since optimizing the supply chain for raw materials and components can often lead to cost reductions, the sudden rush of automakers to transition to electric vehicles has created difficulties in the supply of raw materials, driving up the prices of materials such as lithium, nickel, and cobalt. Rocket. The pandemic has exacerbated this problem, with raw materials costing EVs more than ever before prices doubled, which prompted automakers such as GM, Lucid, Rivian, and even Tesla to raise the prices of their electric cars. Fortunately, in 2020, Tesla signed a multi-year deal with an Australian mining company and also revealed plans to begin lithium production at its Texas Gigafactory. By demonstrating its commitment to self-reliance, this DIY approach sets Tesla apart from most other traditional automakers, which rely heavily on suppliers for their components, often facing supply chain disruptions in the process. Another way to reduce costs is for Tesla to benefit from cooperation and partnerships with other companies, research institutions, or governments in the field of battery technology. This move could provide access to shared resources, expertise, and funding, accelerating progress and reducing costs. Interestingly, Tesla has taken a step in this direction. The automaker is preparing to stir up some controversy by teaming up with CATL, China's dominant electric vehicle battery company. This interesting plot is unfolding as Tesla is in discussions with the White House about potentially establishing this battery factory in the heart of Texas. Now, what makes this narrative even more interesting is that Tesla appears to be taking a page from Ford's playbook. Recently, Ford made headlines by announcing a deal with CATL to build a battery factory wholly owned by the U.S. automaker. This move by Tesla will help the automaker produce more batteries, and as Tesla continues to expand its production capabilities, it can thus benefit from economies of scale. Large-scale production often results in lower costs per unit, and this includes those costs associated with battery manufacturing. Tesla could also invest in research and development to enhance battery technology, improve materials, and improve manufacturing processes. Already, the automaker is making significant progress with the 4680 cell and recently confirmed a significant production milestone after building its 20 millionth cell at its Texas Gigafactory. In June, Tesla announced the production of 10,004,680 battery cells at the factory, meaning that in just 16 weeks, the automaker doubled its production, bringing the total average production to 625,000 cells per week. Back in 2020, at the Battery Day event, Tesla unveiled its 4,680 battery cells, the auto company's solution to increasing the power, range, and lifespan of vehicles. A few of the 4,680 battery cells are integrated into the Model Y, and it is believed that these battery cells will be crucial to Tesla's new vehicle software. Like the Cybertruck, It is expected to enter production and delivery stages by the end of the year. When it comes to Tesla, the focus is not necessarily on high valuations, but rather on ensuring the company's sustainability. One way to do this is to control battery costs. But do you think Tesla is able to reduce these costs to zero? Let us know, and let us know how you rate Tesla. And if you want to learn more about what Tesla has been doing over the past few days, go ahead and click this next video on your screen. I'll see you later.